Roblox disappointing the street this week after disclosing some key metrics that fell short of expectations. The company warned that now expects average bookings per daily user to fall from a year ago. Our next guest, though, saying that now is still the time to buy. Joining us now is Franco Granda, DA Davidson Analyst. It's great to see you here, Franco. So you reiterate your buy rating on the stock, $55 price target. Clearly, you must think that yesterday's sell-off was an overreaction. Why are you so optimistic?
Yeah, first off, thanks for having me. And then you have to think about how or what drives Roblox's business, right? It has to do with the DAUs, the number of users, the number of hours engaged per user, and then the monetization, right? So the monetization piece right now is suffering a little bit due to the pandemic, right? That's due to people not spending money due to inflation and whatnot. And then you also think about the seasonality of the business. When kids are in school, they're less likely to spend money. But when the summer picks up, that's when the monetization really kicks in for the company. So what my argument here is that you have to focus on the user growth and the hours of engagement for the company, because once the monetization piece comes back, that's when you'll really see the top line accelerate.
Yeah, the surprising number was the daily active user, to your point, up 26% to 66.2 million. Were you surprised to see the stock a significant drop despite that number?
Absolutely. I think that people, got a little bit ahead of themselves in terms of expectations. I think many were looking at the mobile gaming data and what that suggested for what the first quarter number would be. And people were thinking that it would be a nice beat. But it seems like the mobile gaming business is staying strong, but it's the other side, the consoles, the PCs, that are not holding on as strongly. To that end, I think that the user number, that to me was impressive. And the drop is unsurprising because that is just seasonality. You have January being strong after 4Q, the holidays, dip in February. And then the fact that it dipped again in March is not surprising. We should see that kind of ramping, like I said, as the school ends and people have more time.
Franco, what about the fact that the company is no longer going to provide those key monthly metrics? How does that change how you evaluate the company, how you look at this company from an analyst perspective?
Yeah, absolutely. Clearly, whenever we have less data, it's not good for us. But I'd say it's unsurprising that they're getting rid of it. If you look at the stock reaction, whenever the company published the monthly metrics, the stock would be up or down over 10 double digits every day that they posted those metrics. And so the fact that they want to get away from that noise intra-quarter before they're able to talk about the quarterly dynamics and what's going on in the fundamentals of the business, and that is really the reason why they're getting rid of it. I wouldn't read past that, as that's how I see it. But in the meantime, what trends we'll be watching out for will be credit card data, the number of posts online, or that mobile gaming data, which seems to be having a strong correlation to the top line of the entire company.
And your price target has about 37% upside, so it'll be an interesting story to watch. Franco Granda, nice to see you. Thanks so much for that.